forecast is a future view of what your business finances will look like for the coming year that you're projecting.
Yeah. And I can say from my own experience, what my very first objection, so I'd like us to sort of tackle that objection head on here. My very first objection when you explained this to me years ago was, oh, well, that can't be done in my industry.
Yep.
And the reason I said that was because, and I've said that here, I think I've said this on this podcast before, but was because I had no idea where my next job was coming from.
Yep.
So how the heck was a little itty bitty designer Rebecca with like one assistant going to be able to forecast my revenue for a year if I only knew the projects that I currently had going? All right. I'm Rebecca Hay, and I've built a successful interior design business by trial and error, podcasts, online courses, and so many freaking books. Over the last decade, I've grown from an insecure student to having false starts to careers, and now I'm finally in the place where I want to be. Throughout my journey, it's been pretty obvious that I'm passionate about business and helping other entrepreneurs do the same. Each week, I'll share tangible takeaways from my own experience and the experiences of other badass women to help you build your confidence and change your business. Okay, Merilee is back. Welcome back to the podcast.
Thank you, Rebecca. It's great to be back on this beautiful sunny day.
Yes, finally, it's like summer is just around the corner for us as we're recording this, and it feels so good.
It feels fantastic. Fantastic. I'm very happy that it's this time of year.
For the first time ever in podcast history, I'm just going to skip your introduction because we've already had you on twice.
Yep.
So everyone can go back and listen to the other 2 episodes with Merilee, all on knowing your numbers. And I will get those episode numbers and I will tell you what those are. So give me a second to look those up. But today is our long and awaited, much anticipated episode all about forecasting.
Yes, it's very exciting.
Which is so wonderful that we're rounding out this 3-part series, if it is 3 parts, we'll see, with this one, because this was the very first thing that you asked me to do when we became friends. And I was designing, I just finished designing your house, and we were talking about business. And that was, I remember it was the first thing you asked me. You're like, well, are you forecasting? And I was like, well, I don't know what that is. So probably not. And then you had to teach me a whole bunch of other things first. And then you showed me how to do it. And then I was sent out into the wild to work on it myself for several years until you boomeranged back into my life.
Yeah.
Helped me get much better at it.
Yep, I remember that well, but I have to tell you, it's always been so pleasurable to work with you on these things because you have a passion for learning more about your business and how to understand how your business works. And, you know, as much as it's a necessary evil and people who don't find numbers fun, and that tends to be a lot of people who are creative because it's a left brain, right brain thing, you know, tend to resist it. But, you know, the more you know about your business and the numbers of your business, the better decisions that you can make, and you can also help yourself plan better and alleviate some anxiety as well. So I've always enjoyed that you, despite how much you may not enjoy it, you tackle it.
Thank you. I appreciate that. I mean, it certainly feels like an uphill battle some days, most days I will say, but you are so right. I mean, I feel now more than ever, is that true? Like knowing my numbers and understanding, especially the financial forecast, like the financial position of my company, our run rate, which we've talked about in a previous episode, and just really understanding profitability has helped me make better decisions inside of my company. And sometimes you make a decision based on one forecast and something changes as we have gone through together. And then you have to then you change, and you not change your mind. Then you you have to make further changes, and maybe it doesn't go the direction you wanted it to go. But you're right, it's so much less anxiety inducing when the numbers are just in front of you.
Right. Yep.
Instead of, like, for the longest time, especially, like, I keep thinking about hiring. For the longest time, I would get really busy and I would panic that I needed people, and I would just hire. And I didn't really know what I could afford to hire. I didn't know what cash flow was coming. I didn't know where my projects were coming from. And I would just hire a bunch of people. And then it would get slow again. And I would be like, I don't need the people. And it would be this constant panic of, I don't know what I can afford. I don't even know what it costs to run my business, which I know we're gonna do in another episode. So it's really been extremely helpful, as everyone always said it would be, but you've made me do it.
Well, the thing about forecasting is you have to understand that it has to be dynamic. So you do it to the best of your knowledge and the best of your ability, basically in anticipation of the start of a new year, or at any point in time in the year, whatever. But you usually do it for a calendar year or a fiscal year, and then you may need to adjust it based on things that are happening in the industry, decisions that you've made, and things that are actually resulting in terms of the actuals versus what you've been forecasting. The point is, you have to be willing to go back into it and be dynamic and make changes as changes occur.
Absolutely. And
it's not one of those things that you can do it once and set it and forget it.
No, and to be honest, that's kind of what I did do. Like, after I learned about the needing forecasting from you, and I set it all up, and then it just still felt like too much. I had asked my accountant at the time to help me with it, and she helped, but she almost overcomplicated it so that it was too much information that would be pulled into this spreadsheet. I was paying for her to do it. And then I just assumed that, she's doing it. And then I just kind of stopped looking at it.
Right.
So I didn't actually know my numbers, which is the title of this episode. Someone doing the numbers is not the same as you actually knowing the numbers of your own business.
100% agree.
So just before we dive in more depth to that, I just want to share, I looked up the numbers of the episodes. So part 1 of the Know Your Numbers series with Merilee is episode 96. So if you're listening right now and you haven't listened to that, I highly recommend you go back, give that a listen first. It will make this episode a lot easier to understand. And that part 1 is understanding project profitability. We go through some really basic accounting terms and what that looks inside a design business. And then part 2 of this Know Your Numbers series is episode number 108. And that is what it costs to run your business. We talk about your run rate and understanding your expenses. So please also go listen to that episode. It is a 3-part series for a reason. Ideally, you listen to part 1, then part 2, and then part 3. But hey, if you're here and you're just super duper whiz, stick with us. It's going to be a good episode today. All right. So what is a forecast, Merilee?
Well, I'm not going to give
other than a weather forecast.
That's right. I'm not going to give
which is never accurate.
That's right. Well, and that's what some people will say. I'm not going to give you the textbook version. I'm just going to, sort of do it in basic terms. I mean, like you said, like a weather forecast, it's interesting. It's something that you are projecting what you believe to be the numbers or the facts of your business, what you hope to be the facts of your business, based on information that you have gathered or patterns of financial occurrences that have occurred in the past, that you can then plug into something like a spreadsheet to give you what you anticipate or forecast your business to look like over a coming period of time. So it's not dissimilar to a weather forecast in that, you've got meteorologists have all kinds of data inputs that they factor into models that spits out the forecast that we see. And I think that was a great analogy, Rebecca, because we all know that, people often say being a weather forecaster is the only job that you can have where you're consistently wrong and you still get paid.
That's
Right?
the truth. Yeah.
Right.
Yeah.
So, the idea in business is not to use forecasting in such a way that you're consistently wrong and you still get paid. But the point of that analogy is it's a bit of an art and a science. So forecasting really is taking a future look at your business and taking the information that you know and then filling in the blanks of information you don't know to try to project what you want your business to look like over the coming period of time that you're forecasting, which is typically a year.
Right.
And then, so then there's ways to forecast, right? So you can, if you think about it as the highest level, you may say, well, last year I did $500,000 in revenue. So this year I want to do $750,000 in revenue and be done. Well, that's a dream. That's not a forecast, because that's just your top line number. It's not giving you any details into what you need to do and what needs to be true in order for you to achieve that number. So yes, it's great to have a goal. So I would call, the top line revenue a goal, but then you need to break it down by quarter or by month. And I would recommend month, to say, like, if you wanted to do 750,000 in a year as an example, you then say, okay, some people, depending on your type of business, you could divide it by 12, and that would be how much revenue you do every month of the year. Other people might say, my business is very cyclical and I need to chunk it out. And so maybe I need to put in, 250,000 in the first 4 months, 250 in the second 4 months, 250 in the last 4 months. But you have to also enter all of the expenses, what it costs you to run your business. So that's a really long answer to say the forecast is a future view of what your business finances will look like for the coming year that you're projecting.
Yeah. And I can say from my own experience, what my very first objection, so I'd like us to sort of tackle that objection head on here. My very first objection when you explained this to me years ago was, oh, well, that can't be done in my industry.
Yep.
And the reason I said that was because, and I've said that here, I think I've said this on this podcast before, but was because I had no idea where my next job was coming from.
Yep.
So how the heck was a little itty bitty designer Rebecca with like one assistant going to be able to forecast my revenue for a year if I only knew the projects that I currently had going?
Right. And so I'm glad that you raised that, because you're not the only business owner I've worked with who has made that statement, and in different industries, right? So it's really very interesting because, everybody forecasted the biggest, Fortune 500 companies. They can't survive if they don't forecast, right? Because forecasting helps you and forces you to plan on how you're going to achieve that. And without a plan, really all you have is a dream, right? Or hope. And I've said this to you before, hope is not a strategy. So, but you're not alone in that sentiment about, I don't know where my next job's coming from. And so if I remember correctly, what we did then, and that's when I would have introduced you to the concept of laying out the entire year, every month, and just start with what you know is coming. Don't worry about what you don't know yet. So the easiest way to start is on your revenue lines, is you put in what you know is coming. Just start with that. It's pretty simple, right? But really, where the rubber hits the road, for lack of a better term, is when you put in all of your expenses that you know are coming, that it costs you to run your business. So that's what we talked about in the last episode, was your run rate to run your business. And you put in all of the known expenses in every month in all of the categories of expenses that you track. So what you'll end up with is you'll be able to see, regardless of what you anticipate your revenue to be, you're going to see clearly on a spreadsheet across 12 months, based on the categories that you track your expenses in, what amount of expenses are going to come out of your business, regardless of how much revenue you generate. So that's step one, is understanding all of your expenses throughout the course of the entire year.
And if you don't know how to do that, I'm just going to add a reminder. Go back to episode 108, episode 108, which is part 2 of the Know Your Numbers series. And we walk you through exactly how to calculate and figure out what your expenses are, so that you can start to see what it's going to cost you to keep your business open every month for the duration of the year.
Right. And the easiest way to do that, I mean, even if you haven't categorized the different categories of expenses, is, again, we talk about run rate, and that's the total amount of money it takes to run your expenses, run your business. And when you're first doing your forecast, you don't even have to worry about the ebbs and flows of the dollar value of expenses. So in some cases, you know, like your personal life, one month something might come out that's more expensive than the next month, right? So it has ebbs and flows. What I would suggest for the most basic start of forecasting is you just take what you know your run rate expenses are for the year for your business and divide it by 12. Just put an equal amount of expense into every month, right? Because what we're doing is forecasting your business. We're not trying to anticipate cash flow, which is an entirely different, it's not entirely different. It's a product of forecasting, but that's not what the purpose of this is. And that's way more complicated than just forecasting.
Mm-hmm. So, okay. So we start with, so before we get too far ahead of ourselves, in a minute, I think what would be beneficial is if we share just the basics of a spreadsheet, like what you're going to put in that first column from top to bottom, and then across the top row, and let people kind of figure that out, what they put in. But so I just want to circle back. So you're saying the first thing you do is you put in what you know.
Yes, 100%. Absolutely.
So that would look like your expenses. So what does it cost you on a month to month if you have rent? And we go through all that in the other episode. But then if you have any current projects or consultations booked, when are those happening? Or when are those fees or invoices going out to those clients, and how much money will you be collecting?
Correct. Absolutely. But in what's always start with everything that you know.
So before we get even further ahead, I just want to dive into this a little bit more, because some designers bill their services hourly. And others, like us, more often than not, collect fixed fees. Can you explain the difference of knowing? Because I can imagine someone listening is like, well, I just bill hourly and I don't know how many hours it's going to be. Right?
Well, so in a case like that, so as an example, if you bill hourly, and let's say, so let's pretend we're starting with a year that starts in January. So let's say it's November prior to that next year, and you're doing your forecast, and you have a job that is booked for February. And maybe it's going to be February and March and whatever. You'll have an idea when you've booked the job of approximately how many hours it's going to take. And I would have to imagine that you're going to anticipate how you're managing your schedule for those hours. So, let's pretend that there's 100 hours that you think you're going to bill for in February. And then there's another 50 hours that you're going to bill for in March in order to complete that job. Then you just take that 100 hours multiplied by your hourly rate and put that in February as your anticipated revenue for that period. And then put the 50 times your hourly rate into March. Because, and so what's important to realize is, folks that are in this design business, if you do this as a professional, when you have a job, you have an idea of what it's going to take. And you don't have to be 100% accurate, but you based on your experience, you will have an idea. So put your best guess in.
Yeah. And then if you do bill fixed fees, like we do, for example, and if you know the way I collect fees, if you collect 100% of the design fee up front and your client is just signed off and you know that they're going to pay your invoice in 3 weeks' time, then you put that total amount that they're paying you in next month or whenever you anticipate receiving that money.
Yeah,
and
absolutely.
if you break it down, if you do installments, say it's 50-50, so you put in 50% of that fees coming, let's say in July, and then the other 50% will likely come in September. That's money that you know is coming because they have signed off, and maybe they've already paid the 50% or they've already signed the contract and they're ready to pay. Again, capturing the numbers that we know are coming in first.
That's right. Absolutely. And this is all future focused, right? So, you know it's coming. So the other thing that you have to do in the design business is it's not just about your fees. You then also have to say, okay, if you're buying goods for your clients, right? So again, it depends on how you build that. But again, if you know that you've got a project coming, you probably have an idea of the full scope of the project and how much goods at a selling value you're going to be buying for your clients. And I do understand that it's more complex when it comes to the goods in the business because you buy them over a period of time and you pay for them over a period of time. To make it easy, my recommendation would be to put the sales of the goods in the month that you're basically anticipating that you're going to collect the money from the client, and put what you anticipate the cost of those goods in the same month. And however you calculate, because we covered in a previous episode, the difference between the selling value of the goods that you charge to the client and the cost of those goods that you actually pay to the vendor. And we've talked about how you should keep your trade discounts and not pass them on to your customer. So again, it's all about anticipating. Now, again, when it comes to the goods, you'd have to be a financial whiz to really try to anticipate. You'd have to do a lot of historical research to say, 10% of it goes out in the first month, 50% in the next, then maybe 30, then it trickles down. Don't make yourself crazy. Put the lump sum in the month that you anticipate starting the job or getting that fee from the client for the goods, and put the cost of those goods in that month.
So before we move any further ahead, Merilee, I think it would be useful right now for everyone to understand what this spreadsheet could look like.
Yep.
So they can see the left column and then the top row before we get too far ahead, just to get a visual. So maybe walk us through, because I have mine open in front of me, but walk us through how someone would structure this before they start to plug in the numbers that they know.
Perfect. So what I would do is, if you think of a spreadsheet, you've got the columns across the top that start with A, and then you've got the rows across the left that goes down the side that starts with number 1. So I would leave column A blank for now, go to column B, and in your first row, put in the word January or whatever your first, so if you're planning for a calendar year, start with January. If you're planning a fiscal year, you start with your first month of your fiscal year. But let's just, for ease of purpose, say, it's a calendar year. And you just put all the months all the way across the top. And after December, you need another column with the totals. Down the left-hand side in column A, you're going to go down and you're going to start putting in your headers of what you're going to put in the cells within your spreadsheet. So the first one you're going to put is it's going to be revenue. And under revenue, in that section of rows, you're going to put separate lines for things like consulting income, if you charge, or your consulting fees. You're going to, again, if you put design fees, you're going to put design fees in there. If you have sales of goods, so goods that you're reselling to a plus customer, you're going to put that in there as well. And then you're going to have a total line where you're going to total up all of the revenue that's coming in. Then you'll go down and, leave a space because you need some visual space to make it easy to read. Then what you need to do is put in a line that's called cost of goods sold, because as we listened to a previous episode, this is the cost of the goods that you pay to the vendor of which you're selling to the client. So the sales of the goods goes in your revenue. That's what you're selling it to the customer for. And then underneath, under revenue, you put in your cost of your goods that you're selling. Mm-hmm. And then you take your total revenue. So that becomes a total, and we'll get to the formulas in a second. I think you want to go through the rows first.
Yeah.
Okay.
Let's go through the headings of each row.
Yeah.
And what I think might be useful, and I'll make sure Vera knows about this, is if we can give everyone who's listening to this episode a freebie. It would just be empty, but the empty template, just so you can visualize. And so print it off and go along with us. And it'll be at RebeccaHay.com/forecast. And you can download that PDF so that you can get that visual of what we're talking about. Yeah. It's much more, I understand how difficult it is to understand this without a visual reference. So I would recommend absolutely doing what Rebecca's suggesting. So after revenue, then you have a line that's called cost of goods sold. Then you're going to have a summary line that is your gross profit, because your gross profit is the sum of all of your revenue less your cost of goods sold, and that's going to be your profit. After that, then you start listing you have a heading that says expenses, and you start listing all of your categories of expenses. And again, if you haven't categorized your expenses, don't worry about it, but at least make sure you capture the total amount of your expenses. But in Rebecca's case, as an example, we have lines such as advertising and promotion, payroll, subcontractor expenses, rent, insurance, car lease, meals and entertainment, et cetera, et cetera. So you list all of your categories of expenses, and then you have a line where you total all of your expenses. And then your last one will be your income before taxes. Mm-hmm. So basically how it works is, from a formulaic perspective, you list all of your revenue sources, and then you have a line that's total revenue, and that is the sum of all of your revenue sources. Then below that, you would have your cost of goods sold. And what you would do in your profit line, your gross profit line, is you would take your revenue, total revenue, minus your cost of goods sold, and that will give you your gross profit. Then you make sure you have a sum of all of your expenses, and your net profit before taxes is your gross profit minus your total expenses. And that will give you a sense of, in any given month, how much profit or not that you're going to make. Mm-hmm. So when you first fill out when you create your spreadsheet, once you've done all of that, this is where we say, then go in and enter what you know. So as we talked about before, the quickest and easiest thing to enter are all of your expenses based on the work that you've done to look at your historical expenses and what you know to be your run rate of your expenses, and enter them through the whole course of the year. And then go back and enter in all of the revenue streams that you know to be true, that you may have booked. Mm-hmm. And once you've done all that, then you're going to look and you're going to see, okay, so based on everything I know, here's how much more revenue, because that's what it's going to tell you ultimately, because you're going to have months
if you do what we're talking about, and you've entered all of your expenses for the whole year, and you've entered the revenue that you know to be true, you're going to be able to see, once you've made your formulas in there and you can see your net profit before tax, you're going to see months where your net profit is negative. And basically, and then it's going to project out to the whole end of the year. And that's going to tell you how much additional revenue you need to generate just to break even. Because when you hear the term break even, what that means is you make just enough profit to cover your expenses. And as a minimum, just start with understanding what you need to do to break even. You want me to pause there before I continue?
Yeah, I think that's a good pause. I think we should pause there because I think it can feel like, oh my gosh, okay, whew, that's a lot. I don't understand net profit, margin, gross, cost of goods sold. What is all this? It's bananas. So again, I'm going to encourage you guys to go ahead and download the PDF, rebeccahay.com/forecast, to help you walk through the visual of these line items. Because I think that's where, once you see it on paper, it makes sense.
Yeah.
But I mean, if I were to summarize, essentially where we're at right now is you basically want to document on a piece of paper what every expenses that you have every month.
Yep.
And like Merilee says, if you don't know them monthly, or maybe you pay for certain things annually, you could divide it by 12. Or if you really get into detail, you could be specific about which months you get charged for what. So you know which months are your heavier hitting months when you have more expenses, because a lot of software programs, we often will pay for the annual membership. I know that happened to me back in like March or April. Out of nowhere, I got wham, a couple $1,000 charges for different software we use that just happened to fall in the same month.
Yeah.
And I wasn't expecting it. So for me, I'm going to now pay a little closer attention to, okay, what months are we getting billed for these annual services, as opposed to breaking it out? Because the reality is that might mean that in April, I need to make sure that I have enough cash in the bank, because that's when we get those, $2,000, $2,500 Asana bill, or whatever it was. So it's like, what's happening?
But Rebecca, I'm just gonna pop in there for 1 second, because you make a very good point. So forecasting, when you're first starting, you could just annualize what's your run rate, divide it by 12, and off you go. But as you learn more and understanding and knowing your numbers, then you can do what you said, which is you try to project when the actual expenses come out. And that's going to get closer to helping you manage your cash flow. Right? So they're similar, but not exactly the same thing. But once you get better, yes, you can forecast them in the month that you're knowing that they're going to come out. So yeah,
absolutely. So it's understanding all of that on paper so you can see it on paper, but then it's also understanding what money's coming to you for your design fees, right?
Yep.
And then what money's coming to you for any goods or products that you're going to be reselling to your clients.
Yeah,
that's right. As simple as that. It's really 3 areas that you could break down into more, but it's understanding what's coming in from clients for design fees, which I like to keep separate than what's coming in from clients for goods.
Yes.
And then what's going out. What are your expenses? It's as simple as that. But if you can start to break down each section with more detail, it's extremely helpful.
Yeah. And Rebecca, to your point, there's the 3 sections. There's the revenue that you're generating from your design fees. Then there's the revenue that the money that you're collecting to sell goods to clients. But don't forget, in addition to expenses, you also have to remember you have to factor in the cost of the goods that you're reselling to the customer, because you have to pay the vendors for that.
Yes.
So they're not technically classified as expenses, but it is still money that will go out.
So for example, if you're collecting $100 for a lamp from a client, but the lamp only costs you $50, you need to reflect that you're actually making $50.
Right. But it's better to put those 2 things separate and show the sale of that good of $100 lamp, and then the cost of that good is the $50. So when people get the spreadsheet, they can see where you put that in place.
Absolutely.
And then once you've done that, you're going to then have a clear picture of what your year is currently, to the best of your knowledge, is currently looking like. And then you can say to yourself, okay, so based on what I know, I need to generate revenue in whatever months. It's going to be very obvious what months you're going to need to generate revenue in. And then you can start to plan how you're going to achieve that revenue. So that ties into how you market your business. It ties into how you promote yourself. It ties into possibly asking for referrals from happy clients, different things like that, because it really helps you understand what you're going to need to generate and where you need to put a push on.
Yeah.
And then
exactly.
and so then what we can help you understand as well is, once you know what the difference is between what you know is coming in and how much you need, then you can say, okay, so I need to generate X more dollars of revenue over the course of the year. How am I going to do that? And when do I anticipate that I will be able to bring that in? And once you do that, then you can plug those numbers in your forecast and see, based on your best estimate of future business that you could generate, you put those numbers in, and then you can see how your year will pan out from there. But that helps you understand what you need to do going forward.
And that's where, when we say the forecasting is powerful in two ways. One, it helps you see what you've already committed to, or what's already committed to you and coming in. And then you can visualize the gap.
Yes.
So the second is, what do I need? Like you just said.
Yeah.
Here's what I have. So, and then maybe in your dreams or in your goal setting, you were like, I just want to bring in like $200,000 in top line sales in the entire year. And you put it into the forecast, and let's say it's June, and you see that you only have collected or have committed to receiving $50,000 worth of fees and products. Oh, shoot. Am I going to make it to 200,000? If I halfway through the year, I'm only a quarter of the way there. And if I'm not going to make it to 200,000, what will I make it to? Or what do I need to do to make it to 200,000?
Yeah.
Maybe I need to drum up three more big projects that are $50,000 each. Or maybe I need to just cut my expenses because the money I'm making isn't going to be enough to get me to the end of the year. There's a lot of takeaways, but it's really understanding really where you're at financially. Because for me, that has been and still is the biggest learning, more than really planning ahead and guesstimating the projects and all that. And that's really wonderful, but it's seeing where we're at. Because sometimes as creatives, we're just running, we're crazy, and we feel so busy. Also, many of us don't have help in the form of an assistant or a junior designer or an administrator or even a bookkeeper. And so we feel oftentimes like we're so busy and we're drowning, and wow, I collected a lot of fees from that client. That's a lot more money than I ever used to get. I must be doing really, really well. But until you go and you take those numbers and you put them into a spreadsheet, you don't really have a good understanding of where you're at, what's your revenue at so far this year, and what are my expenses? Because I've been in a scenario where my expenses started to creep up and then the revenue started to trickle down. No, that's the wrong term. Dry up, go down. So revenue's going down and expenses are increasing because maybe I hired because I thought I was going to need the extra person. Maybe I invested in a program or a software. And so that's a really good way to catch that before it's too late.
Yeah, absolutely.
So that at the end of the year, when you give all your receipts to your accountant and your accountant's trying to file your taxes, you don't find out, oh, wow, I'm in the red. I owe money to the government. I didn't make any money. I paid myself, but Somehow I'm behind and I'm robbing Peter to pay Paul. And I know many of us have been there, especially when you're first starting out and you're just wanting to do the work and you're just trying to make in some money. Keeping track of all the numbers can feel overwhelming. It can feel daunting. It can feel not essential. But I'm telling you right now, this has been a game changer for me in all aspects. In all aspects.
And one of the things you can do with forecasting, I mean, it can be challenging the first time you do it. Getting the expenses can be relatively straightforward. You can then, when you said earlier, how do I know what to forecast? I don't have any projects or whatever. And we said, start with what you know. But if you go back and look at previous years, if you have a way to find out, and you can track over your previous years what revenue you generated in each of those years, even just start with a total. Even better if you know what months that came in. You can anticipate and put in your forecast what has been your typical revenue. So you start with what you know, and then if you look at historically what has happened and you say, well, if I, again, none of this is cast in stone, but you think, if I keep doing what I'm doing and it's worked for 5 years, and this is what the result has been, then it's reasonable to forecast that will be the outcome in the coming year. And so you can start with what you know, and then you can fill in the rest with what has typically been your revenue stream. And you can either, again, divide that across 12, or you can put it in the months that it typically comes in, which is the better thing to do. But just because you put it on there doesn't mean your job is done. You still have to actively make sure that revenue comes in.
Yeah.
Right? Yeah. Because we all know when anybody has worked with any kind of investor anywhere, or mutual fund or bank, whatever, anything that you're investing in, they always say the same disclaimer: past performance is not an indicator of future results. So you use past performance as a guide, but then you have to make sure that you have the right actions in place to achieve those results.
Right. Yeah, it's so true. But I think that it's so much easier to act when you know what you need.
100% agree.
So we've done this where we've gone through and we've said, as a team, we did this at the beginning of the year, we and we didn't do it just based on like some crazy lofty goal, like we want to make $2 million. It was, this is how much money we need to break even. Okay, what does that look like from a project perspective?
Yep.
Because once you plug in, sorry, there's a fire truck going down my street. Hopefully everyone's okay. Once you plug in those monthly expenses and you see at the end of the year the total, it can be kind of shocking.
Oh yeah, absolutely.
And the other thing I love about this, just while we're talking about expenses, is you can put all the regular expenses you have, but then you could also plug in potential future expenses.
Yes.
And this is what for me has been so helpful. If I want to hire a marketing intern, for example, what would that cost me per month? Okay, what if I started hiring that person in June? Great, summer intern. Let's plug in that intern, what I would pay them based on whatever hourly rate is the industry standard. I haven't even put the posting out yet. I haven't even mentioned it on social media. I haven't asked a friend, but let's just plug it into the spreadsheet to see what that looks like. Okay, if I hire a marketing intern, let's say it costs me $1,500 a month, however many hours I need. I plug $1,500 in for each month that I would have that intern. And then I look at what that means to the bottom line of my expenses at the end of the year.
Yep.
Does that make a big difference? Do I have the projects, the income or the revenue from those projects to cover that extra person? Oh, I do. Oh, maybe I could hire a bookkeeper. What does that look like on a monthly basis?
Yeah.
Oh, maybe I can hire a senior designer. Oh, that's a tipping point now. Now that means I need to bring in more work if I want to cover that salary.
Yep.
And then you might scale
Exactly.
it back or decide maybe I just have the senior and I don't need the bookkeeper or the intern.
Yep.
And there's so much power to control that. And I've had these conversations with so many of my design friends in the city asking me, like, how do you figure out who you can afford to hire? And I know that's kind of a separate podcast because there's a lot to that. But I think that just that one little element, or hey, maybe I want an office space. Maybe I want to go rent from the collective. I'd like to have a shared space at the collective. I don't know what that costs. Maybe it's a few $100s a month. Let's plug that in. What does that mean at the end of the year? And do the
Exactly.
projects I have, will they cover that?
Yep. So Rebecca, what you're talking about is once you've got your forecast done, then you can do what if scenarios.
Right.
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 That's the beauty of doing it, is what if. So again, the point is, if you don't know your numbers and you're not laying your year out and you're not forecasting, again, like I always say, it's like you're trying to make decisions in a pitch black space. You don't know where the exit is, you don't know where the entrance is, you don't know what's up and what's down. It's very difficult to make business decisions without being able to see anything.
Right. Right. Yeah. So true.
So I know for people who don't love numbers, like I love numbers, this is an excruciating thought to actually take the time to do it. And I recognize that you will find it painful. But what I would say to anyone listening is, it is so worth it, because if it's your business, you owe it to yourself to know your business. And that doesn't just mean your profession, it means the nuts and bolts of what it takes to run your business. And you need to know your numbers.
Yeah. I mean, it's painful. I'm going to say point blank. It's been painful learning this stuff and having to implement it. It's been a little bit painful for me as a creative, or someone who's just always said, I'm bad at math. I never did well. Like, I was literally the only person in my high school, and I went to a private all-girls school that like pushed you for excellence, who went to her guidance counselor and said, listen, my career path is acting, because that was my path at the time. I will never need math. I do not want to take whatever was like grade 11 or grade 12 calculus or whatever it was. I don't even remember. And I got permission, and I was the only person in my entire year that didn't do the math class because I hated it that much. And I did like Spanish or something, and I was so much happier. But here I am. Damn it.
I know it always comes back to haunt you, right? You know, it's very interesting because you'll see it hear it in different podcasts, read it in different books, see it in movies, whatever. Math is the foundation for most things in the world, right? When you think about your own business and design, how much math is involved. You go and do your measurements when you're doing getting your CAD drawings ready, and you're taking measurements for the house, and you're calculating this and yardage, and there's so many things that in the design world start with math.
Oh yeah. I was actually quite shocked when I went to design school and then started working in the industry at how much I wish I was better at math, to be honest.
Yeah. So, you just got to find a way to make numbers your friend.
Yep.
They're only scary. I will say this about your numbers. They're only scary if you don't know them.
Right. Yep. That's such a good point. Such a good point. So for the forecast, and so I'll let everyone download the PDF so they can get a visual of it, so you understand the concept behind plugging in that first column on the left from top to bottom, all the monies that are coming in, right? Any costs are going out, any expenses, and looking at the bottom line and understanding that at the bottom of each month, there may be some positives and there may be some negatives. And that is kind of the natural flow that I have found within the interior design industry, because what happens for a lot of us is we get big checks from clients especially if you follow a process like I do, where we are designing everything up front and then we're collecting a large lump sum of money. So there could be a month where we're collecting over $100,000, but then the next 3 months we don't collect anything. So that's where I always struggled, thinking this isn't going to be helpful. But actually, if you do it over the entire year, you can start to see the ups and downs, and where possibly you might need to bring in, you might need to hustle, convert some consultations so that you can bring in within a certain 2 or 3 month period, new cash flow so that you can cover those expenses, or so that you can grow to meet a goal.
Mhm. Yeah. Yeah. I mean, cash flow is a more complex item that is probably not well served on a podcast.
Yeah.
We can attempt it at a future date, but I think we've got a few more episodes that we probably need to get through.
Yeah. And Vera and I have talked about putting together a training that would be like a Zoom training with yours truly, with spreadsheets, with all the paperwork, because I think this is something that designers, they may not want it, but they definitely can use it.
Yeah.
And I think that people would really appreciate taking the time to learn it step by step, similar to how we've done in the podcast, but a little bit more visual and a little bit more hand holding to help designers understand, because the numbers, they tend to just wash over us. And then you just want to walk away.
Yep.
If you're anything like me. I mean, that doesn't happen to you, Merilee. That's me.
What we should probably do is the next episode, possibly, is talk about, once you've got your forecast, then as the year progresses, you need to convert each of those months. You need to go back and put in what actually happened.
Yes. Yes.
Because that's the whole point, as I said earlier on, is once you do your forecast, you can't just set it and forget it. Then as each month goes by, you need to go back into one of those, the month that's gone by, you need to pop in what actually happened. And it will, and then your totals at the end of the year, because it's all formulas, will recalculate to, you know, what's based on what's actually happened, what is the balance of the year looking like.
Yeah. And that's what we do. And that's where it's interesting to see, oh, we thought that this money was going to come in April, and we thought the expenses were going to be this, but actually they were different. And so that changes that trajectory.
Yeah.
Okay. I think we should stop there because it's a lot of information.
I know it is.
I hope that's helpful for anyone listening. Just to get if you don't take anything away from this episode, I hope that the one thing you take away is that you need to start tracking your money. You need to start tracking where it's coming from and where it's going. Yeah. And so starting to put, even if it, like when I first started this, it was super basic. And over the years, I've changed how I do it. I've changed it back. I've created tabs, whatever works for you. There isn't one set way of doing this, but it has to be something that you can consume and understand. Otherwise, there's no point in doing it. Just like my story of how my accountant used to do this for me, and it was like 1 million tabs, and it was like income report by quarter and by month. And I was like, what is happening? Like, I don't even have any. So like simple is oftentimes better, because the end result is just knowing your numbers and understanding where your business is at any given time, and where you have room to grow, or, you know, where you have an opportunity to save money, make more money, and all that jazz.
Yeah, absolutely.
But if you didn't take anything else away from the episode, I hope you understand that you do need to spend time learning the numbers and forecasting.
Yeah, 100% agree. Knowledge is power, as they say.
Yes, it is. So is that your last nugget of wisdom? What's your last nugget of wisdom today, Merilee?
My last nugget of wisdom on this is, don't be overwhelmed, just get started.
Progress over perfection all day long.
Yeah.
Send us a message in the Facebook group, Designer Meetups, or send me a DM on Instagram. Let us know, have you tried this before? How is it going? Was this episode too much information? Tell me all the things so that we can help you and serve you better. Awesome.
Thank you, Rebecca.
Thank you.